Welcome to our deep dive today. We're going to be going through all the news from February 12th and 13th, 2025. We've got MarketWatch articles, CNBCinvesting.com, even a few from the Motley Fool and Raging Bull.
Sounds like a lot to cover.
Yeah, definitely a lot of market moves, tech updates, some political stuff, and even a few personal finance questions.
Well, let's dive in then. What's first?
This term stagflation light that MarketWatch called a fresh threat to the economy, what is that all about, and should we be worried?
Well, stagflation light is like a milder version of stagflation, which is when you have a stagnant economy with high unemployment, but also prices are going up.
Like a worst-case scenario.
Yeah, pretty much. So stagflation light means we might see some of those things happening, but not as bad.
So slower growth and inflation sticking around, basically.
Right. And that makes investors nauseous for sure.
Especially with stuff like this one MarketWatch article about someone who's 68, still working, but thinking about cashing out their $700,000 401k to enjoy life.
Oh, wow. That's a big decision.
Yeah, right. Especially if stagflation light is actually a thing.
Definitely taking money out of retirement early can mean big penalties and taxes. And you got to think about the long term, too. Will that money last?
Especially since the Fed's saying no to interest rate cuts anytime soon because inflation is still high.
Yeah, it seems like we're stuck with this economic uncertainty for a while.
And on top of that, President Trump is back at it with tariffs. CNBC says he's thinking about reciprocal tariffs, which sounds complicated.
It's basically retaliatory tariffs. So if another country puts tariffs on our stuff, we put tariffs on theirs.
So like a trade war back and forth.
Exactly. And this time it might be Mexico and Canada. Some experts think it could add $6,000 to the price of a car.
Yikes, that's a lot. And Piper Sandler says these tariffs could hurt tech stocks and the S&P 500 too.
It seems like a ripple effect impacting everything. And Andy Home, who's an analyst, is saying it could even cause problems with copper prices across the Atlantic.
Wow, so a lot of potential fallout from these tariffs.
Yeah. And speaking of international relations, Indian Prime Minister Modi is meeting with President Trump this week to talk about trade.
Yeah, that's meeting to watch for sure. It could really change things globally.
Absolutely. The whole trade landscape could be reshaped depending on what happens there.
From trade wars to tech, now Elon Musk AI age verification, and even a stock market powered by Doji are making headlines.
Okay, from trade wars to tech tales. That's quite a jump.
Right. Let's start with the Doji connection. How is Elon Musk's favorite cryptocurrency tied to President Trump and the Department of Education?
Well, it seems President Trump has been trying to downsize the Department of Education for a while, and now CNBC is saying he's found a way to use Doji to slowly take away funding.
So using cryptocurrency to defund the Department of Education?
That's what it sounds like. It's definitely an unusual strategy.
While the Department of Education is figuring out funding, Google's trying to figure out age verification. They're testing AI to do it.
It's because lawmakers are putting pressure on them to keep kids safe online.
But using AI for something like that makes you think about privacy and data, too.
For sure. It's a tough balance. And speaking of tough situations, remember how Reddit stock dropped because of a Google algorithm change?
Oh, yeah, that was rough. It just shows how much power Google has.
Right, one little algorithm tweak and companies can really struggle.
But on the flip side, AppLovin stock is doing amazing, almost a 30% surge because of their AI-powered ad personalization and selling off their mobile gaming part of the business.
AppLovin's a good example of a company using AI in a smart way to grow and change with the market.
And speaking of the market, the Magnificent Seven stocks, which have been doing really well, are starting to slow down.
The Magnificent Seven are those big tech companies that have been carrying the market for a while now.
But now their performance is getting shaky, and some people think investors are changing their strategies.
Maybe they're looking at more value-oriented stocks instead of just high-growth tech.
Possibly. It'll be interesting to see what happens next.
Definitely. And while some are moving away from high-growth stocks, Robinhood is embracing crypto. They just announced record profits thanks to the crypto boom and all the trading that happened after the election.
It seems like they're going all in on crypto now. MarketWatch says they're planning to focus on it even more because of how well it's doing.
It's a risky move, though. Crypto can be really unpredictable.
True. It could be a huge success or a major flop. Only time will tell.
Exactly. And while Robinhood bets on crypto, Chevron's trying to cut costs, they're planning on letting go of up to 20% of their workforce.
Wow. That's a lot of people.
It shows how tough things are in the oil industry right now, with energy prices all over the place and the push for clean energy. It's a tough time to be in oil.
It's a big shift, for sure, and those layoffs show how serious it is.
Yeah, the energy landscape is changing fast.
And it's affecting everything from jobs to the stock market to international trade. It's a lot to keep track of.
Definitely. We'll have to see what happens next week.
We will, and hopefully it'll be a little less turbulent than this week.
Fingers crossed.
Fingers crossed.
It's a sign of the times, for sure, as the world changes and we try to be more sustainable. While Chevron is making those tough choices, Reddit's actually celebrating. They've had profit for 2 quarters in a row since they went public. But there's a twist.
Really? What's going on there?
Even though they're making money, Reddit's stock price went down. Because they didn't hit their user growth targets, Wall Street seems more interested in what might happen in the future than what's happening right now.
So they're focused on potential growth instead of actual profit.
Exactly. It's all about the future in the stock market. And speaking of performance, we can't ignore Meta.
Oh yeah, the Motley Fool article about Meta's stock going up for 17 days straight. That's impressive.
It makes you wonder, is it time to buy Meta stock, or is this just a temporary thing?
It's tough to know for sure.
As always, it's important to do your research. Understand your own goals and how much risk you're comfortable with before investing in anything.
Solid advice. So while Meta's doing well, some investors are staying away from Lloyd's shares, even though they look like a good deal.
Right? The Motley Fool talked about that there are still risks with Lloyd's, even though the stock seems cheap based on their earnings, dividends, and asset values.
So there's always something more to the story when it comes to investing.
Always, you got to look beyond the surface and really understand what's happening with the company before you invest.
Speaking of performance, Shopify's doing really well. Their revenue jumped 31% in the fourth quarter.
That's amazing, especially with the economy the way it is. The Motley Fool article pointed out that Shopify had a great 2024, but the question is the stock still a good buy now at its current price?
That's the million-dollar question, isn't it? Trying to figure out if future gains are worth the current price.
And there's no easy answer. It really depends on your strategy and how much risk you're willing to take.
While some people are trying to decide about Shopify, others are looking at Frasers Group, a FTSE 250 company. Their share price dropped 23% in the last year.
The Motley Fool had a different take on that one. They suggested that Frasers Group might not be as good a deal as it seems.
So buyer beware again.
Definitely. You have to do your research and figure out why a company's stock price is changing before you jump in.
Good advice. Now for a bigger question. How much money do you actually need to invest to retire and live off passive income?
That's a question a lot of people are thinking about, especially as they get closer to retirement. The Motley Fool had some interesting ideas about different approaches and some common mistakes people make when investing for passive income.
It's good to remember that retirement planning isn't about getting rich quick. It's about making a plan that will last.
Exactly. It's about building an income that will support you throughout retirement, not just for a few years.
Speaking of building something sustainable, there's this tech company that's quietly become the sixth largest business in the FTSE 100. It's kind of flown under the radar.
It's amazing how some companies can do that. The Motley Fool talked about how this company became so successful and how they climbed the ranks of the FTSE 100.
It shows that innovation and consistent work pay off, even in a tough market.
For sure. And it reminds us that sometimes the best investments are in companies people haven't heard of yet.
While some are looking for those hidden gems, others are watching Barratt and Redrow, their UK house builders, and their shares went up 6%.
The Motley Fool article suggested that because the market is getting better, those house builders might be good investments now.
That's interesting, considering all the talk about a possible recession.
Yeah, the housing market usually shows us how the economy is doing, so those rising share prices could mean people are feeling more optimistic.
Let's hope so. But just in case there is a recession, the Motley Fool thinks a couple of FTSE 250 companies could be safe bets.
They pointed out two companies that have done well during past recessions. They could be a safe place for investors to put their money.
It's always good to have a plan B, especially when things are uncertain.
Diversifying is key. Spreading your investments across different areas can help reduce risk and make sure you're prepared for whatever happens.
Makes sense. While some are looking for safety, others are looking at a FTSE growth share that's at a 52-week low.
The Motley Fool wondered if this share, which is trading at a big discount, might be a good time to buy.
It's tempting to try to catch a falling knife, but it can be dangerous.
Exactly. You need to know why the stock has dropped so much before you assume it's a bargain.
Good point. Speaking of bargains, some are looking at BP's share price and wonder if it's going to hit 650p.
The Motley Fool looked at what Wall Street is predicting for BP and what might make the share price go up.
The energy sector is always interesting, especially now with the move towards renewable energy.
It's a dynamic sector, and BP is a major player to watch.
Speaking of major players, Cisco Systems just put out their earnings report for the second quarter of 2025, and Seeking Alpha is talking about their revenue predictions.
Cisco thinks they'll make between $870 million and $890 million in 2025, and they expect a lot of growth in their cloud and edge segment.
That's a good sign. They seem confident about the future.
It is a good sign, and Cisco is often seen as a leader in the tech industry, so their performance can tell us a lot about what's happening in tech overall.
While Cisco's looking ahead, Mercury General, an insurance company, is signaling a strong comeback in 2025.
They're predicting a lot of revenue growth because of a 12% rate hike, and they're estimating wildfire losses between $1.6 billion and $2 billion.
Sounds like they're expecting a busy year for claims.
It reminds us that insurance companies are really important. They help people and businesses manage risk, especially when it comes to natural disasters.
True. While Mercury General is getting ready for those claims, WildBrain, the entertainment company, is getting ready for the 75th anniversary of Peanuts.
Seeking Alpha says WildBrain expects even more licensing growth in 2025 because of the anniversary of that classic brand.
It's amazing how those characters are still so popular after all these years.
Peanuts is timeless, and WildBrain is definitely making the most of it.
Now, for some political news, the Trump administration has started laying people off at the General Services Administration.
Investing.com says it's part of a bigger plan to cut costs, but it's making federal employees and unions nervous.
It's a reminder that what happens in politics affects people's lives and jobs.
Government policies and spending have a big impact on the economy. They affect job creation and how stable things are overall.
On a brighter note, LG Chem, the South Korean company, is making progress in sustainability. They're increasing production of 100% plant-based acrylic acid.
That's a big deal for sustainable materials. Investing.com highlighted how LG Chem is creating eco-friendly alternatives to products that usually rely on petroleum.
It's great to see companies investing in solutions that can help us move away from fossil fuels and create a more circular economy.
Sustainability is becoming more and more important for everyone, and LG Chem is definitely a leader in that area.
While LG Chem focuses on sustainability, Brightcove, a video technology company, just appointed Takayuki Tadokoro as their country manager in Japan.
Investing.com mentioned that Tadokoro has a lot of experience in the tech world. He's held leadership positions at other companies before.
It's interesting to see companies expanding globally and entering new markets.
International expansion can be a big way for companies to be, and Brightcove is clearly looking at the opportunities in Japan.
While Brightcove expands globally, Neurocrine Biosciences, a biopharmaceutical company, is in the news because one of their executives sold shares worth $82,792.
Investing.com is keeping track of that insider trading, which can make investors wonder what's going on.
It's always worth paying attention to what people inside a company are doing with their stock. It can give you clues about what they think will happen.
Exactly. If insiders are buying stock, it can be a good sign. But if they're selling it, can make you wonder if there are problems ahead.
Speaking of potential problems, Joby Aviation, an electric aircraft company, is also in the news because one of their executives sold shares.
Investing.com is following that too. It's another example of insider trading that can get investors talking.
It reminds us that electric aviation is still new, and there are a lot of unknowns about how it will grow.
Investing in new technologies can be risky, but it can also have big rewards.
While some are figuring out the risks of electric aviation, NiSource, a utility company, is announcing a big $19.4 billion capital expenditure plan. Leafing Alpha says NiSource wants to increase earnings per share by 6 to 8% through 2029 with this investment.
That's a lot of money. They must be pretty confident about the future.
Utility companies tend to have stable earnings and dividends, so they're attractive to investors who are looking for income. Makes sense. Speaking of stable earnings, Pyxus International, an agricultural company, just increased their guidance for fiscal year 2025.
They're now projecting revenue between $2.4 billion and $2.55 billion, with adjusted EBITDA between $205 million and $215 million.
That's good news for the agricultural sector, which has been struggling with trade issues and climate change.
It seems like Pyxus is doing well despite those challenges. They're benefiting from the growing demand for agricultural products worldwide.
While Pyxus is doing well, I2 Biopharma, a specialty pharmaceutical company, is expecting positive cash flow.
Seeking Alpha says they're predicting growth in their ADHD treatment portfolio, and they'll save $2 million annually.
It's good to see a company working to improve treatments for conditions like ADHD, which can have a big impact on people's lives.
The pharmaceutical industry is all about developing new therapies for medical needs, and I2 Biopharma is clearly making progress. And while I2 Biopharma makes those strides, Biogen, a biotech company, just released their earnings for the fourth quarter of 2024, and Alpha Street has some of the key numbers.
What are they looking like?
Their revenue went up 3% compared to last year, mostly because their multiple sclerosis treatments did well. But their net income actually went down.
Biotech can be a roller coaster ride.
It is. Companies put a lot of money into research and development, and sometimes it pays off and sometimes it doesn't. Biogen is a big player in treatment for neurological diseases, so people are watching them closely.
Makes sense. So while Biogen focuses on those treatments, Coca-Cola finished 2024 with some solid numbers.
Alpha Street pointed out that their revenue and adjusted earnings went up more than analysts expected. Their sparkling soft drinks did really well, and they had growth in emerging markets.
Coca-Cola is such a global brand, it's almost like a sign of how confident people are feeling when they do well.
Definitely. Their ability to keep up with what people want, try new things, and stay relevant is why they've been successful for so long.
While Coca-Cola refreshes its lineup, Walt Disney's share price dipped a bit, 1% to be exact.
AlphaStreet's been looking at their streaming business for the first quarter of 2025.
Disney Plus and Hulu, right?
Yeah, they've been a big part of Disney's growth, but they're facing tough competition from Netflix and Amazon Prime.
It's a battle out there for streaming subscribers.
Definitely, Disney has a huge advantage with all their movies and shows like Marvel and Star Wars, but they're also putting a lot of money into creating new content to keep people interested.
While Disney battles it out in streaming, Marriott, the hotel chain, just announced their results for the fourth quarter of 2024.
Their adjusted earnings actually went down, even though their revenue went up a little bit. They had higher operating expenses, and they've been investing in new things.
The hotel industry is still recovering from the pandemic, isn't it?
It is, and it's facing challenges like finding enough workers and dealing with rising costs, so everyone's watching Marriott to see how they're doing.
They do have a lot going for them, though. They're all over the world. They have a bunch of different brands, and their loyalty program is really popular.
Right, and they're also adapting to what people want now, like personalized experiences and sustainable travel.
While Marriott focuses on those trends, Humana, a health insurance company, reported a bigger net loss for the fourth quarter of 2024, even though their revenue went up 10%.
AlphaStreet broke down their earnings report, and the bigger loss was because of higher medical costs and investments in growth.
Healthcare is such a complicated industry.
It is. There are rising costs, regulations are always changing, and the whole system is moving towards value-based care, so everyone's paying attention to how Humana is doing.
Makes sense. They're a major player in Medicare Advantage, so controlling costs, providing good care, and getting new members is key for them.
Absolutely. Now let's talk about Shopify. They just released their earnings for the fourth quarter of 2024.
How did they do?
Their revenue jumped 31% compared to last year, mostly because of growth in their merchant solutions and subscription solutions. Their net income went up a lot, too.
Shopify's platform is helping so many businesses sell online.
It is, and their success shows that e-commerce is still growing fast. They're in a good position to keep growing as more businesses move online.
Speaking of online businesses, Coca-Cola also announced their earnings for the fourth quarter of 2024.
AlphaStreet says their revenue and adjusted earnings went up more than analysts expected. Their sparkling soft drinks did well, and they've been expanding into new categories like coffee and plant-based drinks.
They really are a global powerhouse.
They are, and their ability to come up with new things, adapt to changing tastes, and maintain their brand is why they're so successful.
Their reach is incredible. They have a loyal customer base all over the world.
Now let's shift gears to politics. President Trump is thinking about putting tariffs on goods from Mexico and Canada.
CNBC says those tariffs could have a big impact on the auto industry, maybe even adding almost $6,000 to the price of a car.
President Trump's trade policies have always been a hot topic, and these tariffs are sure to cause a lot of discussion.
The potential impact on the economy is huge, so everyone's watching to see what happens.
While we wait to see about those tariffs, Google is busy testing AI to figure out how old people are online.
CNBC said that, right? AI to determine age.
Yeah. It could be a way to protect children online, but it also brings up privacy concerns and the possibility of misuse.
AI is everywhere these days, and it's changing things so fast.
It is. It has a lot of potential, but there are risks too. Finding the right balance is going to be crucial.
And speaking of balancing acts, the stock market is reacting to a high CPI reading, which means inflation is still a worry.
Investing.com says U.S. stock futures are up a little bit, which means investors are cautiously optimistic, but inflation is still a big concern.
What the Federal Reserve does, especially with interest rates, is going to be really important for investors as they try to figure out where the economy is headed.
It's a complicated relationship between inflation, interest rates, and economic growth, and it's going to drive how the market feels in the coming months.
So a lot of uncertainty still.
Yeah. And adding to that uncertainty, President Trump might announce his tariff plan as early as Thursday.
CNBC said that right before his meeting with the Indian Prime Minister.
That's what they're saying. Trade tensions have been a constant issue during President Trump's time in office, and these tariffs could have a big impact around the world.
It seems like every decision he makes on trade has global consequences.
It does. Businesses have to be ready for anything.
And Piper Sandler is saying that President Trump's tariffs on China are making U.S. tech companies and the S&P 500 vulnerable.
CNBC reported that they think big tech, energy, and consumer discretionary stocks are the most at risk if things escalate between the U.S. and China.
Trade wars are never good for anyone.
They're not. The global economy is so interconnected that when two big powers fight, everyone feels it.
And as those tensions continue, hopes for more interest rate cuts are fading.
CNBC reported that Federal Reserve Chair Jerome Powell said we're not quite there yet because of the high inflation numbers. It seems like they're not planning on lowering rates anytime soon.
The Fed is in a tough spot trying to control inflation without hurting economic growth.
They are, and everyone's going to be watching to see what they do next.
While the Fed figures that out, Cisco Systems is doing well thanks to their increased revenue forecast for the year.
CNBC says they're doing well because more and more businesses need their networking equipment and software. They're investing in digital transformation.
It's good to see some positive news in the tech sector.
It is. It shows that even with all the uncertainty, businesses are still investing in technology.
Technology really is changing everything.
It is, and companies like Cisco are at the forefront of that change.
Speaking of being at the forefront, AppLovin's stock went up almost 30% because of their strong earnings and a positive outlook for the future.
CNBC said it's because their AI-driven ad personalization strategy is working, and they sold off their mobile gaming business.
AI is changing how companies advertise, too. It's all about reaching the right people with the right message.
Exactly, and AppLovin is leading the way.
While AppLovin focuses on advertising, Elon Musk's company X just settled a lawsuit with President Trump about his account being suspended.
CNBC said this settlement comes after similar lawsuits against Facebook and Instagram's parent company Meta. They agreed to pay $25 million to settle a lawsuit from President Trump.
Social media's power is incredible, and it's definitely facing a lot of scrutiny.
It is. These lawsuits show how complicated things are when it comes to deciding what's okay to say online and what's not.
It's about finding that balance between free speech and preventing harm.
Exactly. And it's a tough balance to strike.
While social media grapples with that, Tom Brady is investing in a sports collectibles company.
CNBC reported that he's buying a 50% stake in Card Vault, which sells sports cards and memorabilia.
So he's branching out beyond football.
He is, and the sports collectibles market is boom right now. It's all about nostalgia, online marketplaces, and the value of rare items.
Having Tom Brady involved is only going to make it more popular.
For sure. He's going to bring in new collectors and investors.
While Brady invests in collectibles, Apple's starting a new health study. Is their first major one in 5 years.
They're working with Brigham and Women's Hospital, and they're going to use data from Apple devices like the Apple Watch to learn more about women's health.
That's interesting. I wonder what they'll find.
Me too. It's amazing how wearable technology can provide so much health information. It could lead to real breakthroughs.
It's incredible how technology and healthcare are coming together.
It is, and it's creating new ways to improve healthcare, help with research, and give people more control over their own health.
Back to politics now. Unions are suing President Trump because they're worried he's going to fire a lot of federal employees.
CNBC says the unions are trying to stop mass firings of federal employees who won't take buyouts as part of the administration's cost-cutting efforts.
The Trump administration has been trying to reduce the size of the government, hasn't it?
They have, and the unions and some lawmakers are pushing back. They're worried about the impact on essential services.
It's a debate that's been going on for a long time, and it's not going away anytime soon.
Definitely. Now let's talk about the economy again. The Bureau of Labor Statistics released the inflation numbers for January 2025.
Yeah?
The Consumer Price Index went up 3% compared to January 2024. Economists are worried that inflation is back, even with the threat of tariffs looming.
So inflation is still a problem.
It seems that way, and it's going to be a big focus for policymakers and investors in the coming months.
While economists figure that out, Rick Reeder from BlackRock thinks a certain part of the bond market is a great deal.
CNBC says Reeder, who's a well-known bond investor, has started buying longer-dated corporate bonds. He thinks they're undervalued right now.
The bond market is so complicated.
It is, and people pay close attention to what Reeder does. He's a smart guy, and his moves can influence other investors.
Speaking of influential people, President Trump just chose Brian Quintenz to be the chair of the CFTC.
CNBC Crypto World says this is a big deal for the cryptocurrency industry because Quintenz is a big name in crypto. His leadership at the CFTC could really shape how crypto is regulated.
The crypto industry has been asking for clearer regulations for a while.
They have, and this could be a step in that direction.
It'll be interesting to see what happens.
Definitely. While the crypto world waits for those regulations, CNBC is looking at how inflation and tariffs could affect Meta and Alphabet.
Those are two of the biggest tech companies out there.
They are, and with people worried about inflation and tariffs, they might start spending less, which could hurt advertising revenue for companies like Meta and Alphabet.
The tech sector is so important to the economy. If those companies struggle, it could have a ripple effect.
Exactly. Everyone's watching them closely.
While Meta and Alphabet face those challenges, Apple is expanding. They're bringing their TV streaming service to Android.
CNBC says it's a big deal. It's the first time in 10 years that Apple has launched a major subscription service on Google's platform.
The streaming wars are heating up.
They are. Everyone's fighting for subscribers, and the best content, Apple's move, shows they want to reach more people and compete with Netflix and Amazon.
It's going to be interesting to see how it plays out.
Definitely. Now let's talk about Robinhood. They're reporting record profits thanks to all the cryptocurrency trading and the post-election trading frenzy.
Their CEO, Vlad Tenev, said it's because they've been focused on developing new products.
Like their new platform for active traders and their gold card offering.
Robinhood has become really popular with everyday investors, especially those interested in crypto.
It has, and and their success shows just how much interest there is in crypto right now.
It also shows how technology is making investing more accessible to everyone.
For sure. Now shifting to international affairs, Indian Prime Minister Narendra Modi is meeting with President Trump and Elon Musk on Thursday.
CNBC said those meetings are happening amidst rising trade tensions.
They are. Modi's going to try to resolve those issues and strengthen economic ties between the U.S. and India.
It's a chance to improve relations and encourage more cooperation.
Exactly, and the outcomes of those meetings could have a big impact on trade investment and even geopolitical relations.
While those meetings are happening, Google is warning that the U.S. might not have enough power to keep up with China in the AI race.
CNBC reported that Google thinks the U.S. needs to invest a lot more in its power grid to handle the growing demand from AI development. That's if they want to compete with China.
AI requires a ton of computing power, which means a lot of electricity.
It does, and the countries that can provide that power are going to have a big advantage.
Now let's talk about personal finance. U.S. Bank has a new credit card, the U.S. Bank Cash Plus Visa Secured Card.
CNBC Select reviewed it, and they highlighted some of the features like earning 5% cash back in certain categories.
Secured cards are good for people who are trying to build or rebuild their credit.
They are, and this one lets you earn rewards while you're doing that.
It's always important to compare different cards before you choose one.
Definitely. Now, while U.S. Bank is offering that new card, Chevron is announcing plans to cut up to 20% of their workforce.
CNBC said they're doing it to reduce costs. It's a sign of how tough things are in the oil industry.
It is. They're dealing with changing energy prices and the shift to cleaner energy.
It's a big transition, and companies like Chevron have to adapt.
They do, and streamlining operations and cutting costs is one way to do that.
Speaking of cost-cutting, President Trump's proposed tariffs on Mexico and Canada could make cars a lot more expensive.
CNBC says they could add almost $6,000 to the price of a car if they go into effect. The auto industry relies heavily on trade between those countries.
The auto industry is so important to the economy. These tariffs could really hurt.
They could. Businesses and policymakers are going to be watching this one closely.
While they watch that, Comcast and NBC Universal are being investigated by the FCC.
CNBC says the FCC is looking into their diversity, equity, and inclusion initiatives. It's part of their job to oversee the media and telecommunications industry.
Diversity and inclusion are so important these days.
They are, and companies are being held accountable for their efforts in those areas.
This investigation is going to bring even more attention to these issues.
It will. Now let's talk about drug prices. CVS CEO David Joyner is defending pharmacy benefit managers, or PBMs. He's blaming drug makers for high prices.
The NBC reported on this, right? There's been a lot of talk about PBMs and their role in rising drug costs.
There has, and lawmakers and even President Trump have been looking at ways to address it.
The pharmaceutical industry is so complicated.
It is, and everyone wants to make sure patients can get the medications they need without breaking the bank.
While policymakers figure that out, 2025 might be the year of the spinoff.
CNBC says companies like Honeywell are breaking up into smaller companies to try to make more money for their shareholders.
It's a way to simplify things and focus on what they do best.
Exactly, and it could create new opportunities for investors.
But there's also talk about privatizing Fannie Mae and Freddie Mac, which are government-sponsored mortgage companies.
CNBC talked about the possible consequences of that. They're a big part of the housing market, and privatizing them could affect mortgage rates and access to credit.
It's a complicated issue with a lot of potential impacts.
It is, and everyone's going to be watching to see what happens.
Now, Bank of America's CEO, Brian Moynihan, is weighing in on inflation. He says interest rates are going to stay where they are for now.
CNBC reported on his comments. It seems like he thinks the Federal Reserve is going to keep their current policy to try to control inflation.
The Fed's decisions have a big impact on the economy, so people are always interested in what they're going to do.
They are, and it's a delicate balance they have to strike.
While the Fed does its thing, Amazon might be ready for a comeback.
CNBC's chart analysis suggests that Amazon's stock is showing signs of a rebound after a period of not doing much.
Amazon is such a giant. Their performance affects so many industries.
It does, and their ability to innovate, expand into new areas, and use their resources makes them a force to be reckoned with.
Well, that was quite a journey through the news.
It was. We covered a lot of ground today.
We did. We talked about the economy, politics, the stock market, technology, even personal finance. It's been a busy couple of days.
It has, and as we wrap up this deep dive, the question is, what's next?
What happens if this economic uncertainty continues? How will it affect businesses, investors, and everyone else?
That's the million-dollar question. Nobody knows for sure, but the best thing we can do is stay informed, pay attention to what's happening, and be ready to adapt.
Good advice. So until our next deep dive, stay curious and stay informed. Knowledge is power in a world that's constantly changing.
I couldn't agree more. Thanks for listening, everyone.